Hi Pasir friends, welcome back to the quarterly update. This is where I go through with your private property statistics for the past quarter and how you can use this to plan for your own purchases or investments. Right, so here you can see this has been the property price index by type of property. You have your residential, your office and the retail spaces. Yep, and for this quarter, residential has actually gone up by 0.7%, right? It kind of tapered down a little bit compared to what has increased in the last quarter. So now you're at 174.80. But if you were to look into the subcategory of these two charts, right, or rather these two lines, you realize that the landed property has increased by 4.2%, right? Whereas the non-landed residential property has came down by 0.3%. So what could this represent? Could it be that the buyers are a little bit more cautious and they are holding on to their purchases, right? They're just on the sidelines seeing what they can. They are just evaluating what they could do. And at the same time, it could also possibly mean that sellers are a bit more realistic and they are thinking it could be the turning point and are readjusting their prices. Right here, for this chart, it tells you how the performance are for the different regions. We have the CCR, the RCR and the OCR. And you can see that for the CCR and RCR, it has come down a little bit in terms of its correction, right? It has slowed down quite significantly actually from an increase on the fourth quarter of 2.7. For CCR, now it's at negative 0.1. For RCR, you had 6.7 and now it has came to a negative territory, right? The only one that has gone up is actually the OCR region. And I think this could also possibly mean because the OCR prices are a bit more affordable and therefore they don't mind paying a little bit, right, of slightly premium, but not so expensive that it's not affordable. Yeah, but this data does tell us that in all regions for the past quarter, there seems to be some form of a slowdown in the prices. Now, what is this chart all about, right? This is the pipeline supply of residential properties. This chart actually refers to new development and redevelopment projects with planning approvals, and planning approvals would mean provisional permission and written permission given to the developers to develop the properties, right? And you can see here, I just show you the numbers here, right? Okay, so what this means is that a total of 10,401 units will be coming into the market for delivery, right? In terms of TOP, they can get the keys. And here I've actually put in blue the ECs. So in 2023, we have a total of about 19,000 over units coming to the market, of which 16,000, close to 17,000 will be private residential, and the rest will be ECs. And this will be the other numbers. Yep. So you can see that beyond 2025, we do not have much new inventories coming into the market, right? And this could possibly mean that properties that are going to TOP in 2025 and 2026, they should do well in the resale market, yeah, right? And to me, in terms of rentals, I think it should start to stabilize somewhere next year when more inventories are introduced into the market, more competition, isn't it? Right? And it should kind of stabilize and taper down a little bit moving forward. Now, this is a chart that we always look at. This shows you the total inventory that is available now. What this total inventory would mean is units that has not collected keys yet, okay? Yep. This other chart is new inventory. So this basically tells you that the orange bar here, right, is the potential supply of 6,700 units, and this includes the EC. Yeah, so the blue one here doesn't include the EC; it's just pure private properties. And the orange one would mean that it involves GLS, en-bloc units, and these units or projects has not been granted planning approvals yet. And once they are being granted, it will then be thrown into the new inventory supply, right? Or rather the existing inventory supply. But this is an interesting one that I've been talking about for the past many quarters, and this kind of charts and shows you the numbers of what is the demand in the market right now, how many people are buying, how many units are being sold. It tells you more or less some of the signals whether people are comfortable to buy something, right? There's a demand, or is there going to be more of a supply, right? So the supply has came down, right, from 14,154 last quarter, and now it has dropped to 14,087 after the introduction of the new inventories. And the demand has also came down quite significantly. Why I say significantly is because if I take 13,000 and divide by 4 quarters, right, that is actually quite a huge number. But right now we are looking at, for the first quarter, we have achieved new sales. Okay, this is only for new sales, nothing to do with resale properties. For new sales, we have achieved 1,825 units for the first quarter. Yeah, and we lump everything together. Right, this is how you see in the broader market data and analysis. Yep, it shows us that though the supply is low, there is still some demand, but the demand has kind of tapered down a little bit. Let me show you an example in the next few slides. If you look at the resale market here, right, last year, I think we all know that we did phenomenally well, right? We almost had the same type of transaction volume back a decade ago, 2010, right? It's at 19 over 1,000. This year for first quarter, a total of 3,377 units has exchanged hands. I think many households are still moving towards better asset classes, are still moving towards private properties instead of holding on to your HDB properties, and that is because, as all of you are well aware, the introduction of the ABSD, right, you only have one golden ticket, one chance. So they're still decoupling and trying to figure out how best they are able to own 2 properties, and I think the resale market gives them a bit more choices. Yep. If this continues at this pace, we should hit at least the numbers of 21.7 and 21.8, right? If this continues, will we hit, the question I think some of my clients ask me, will we hit the same number as last year? Personally, I don't think so, okay? Yeah, now, this is a new slide I'm just showing all of you. I wanted to just show you some of the volume and data to look at this. You can see that this separates into different quarters. Fourth quarter, 2018, then you have first quarter, second quarter of 19, and then it breaks down to 2021, and obviously now we have 2022 first quarter, right? So you can see that this is for new sale, right? New sale. Let's ignore the sub sale at the moment, and then we look at the resale too. So just focus on this column, the total new sale column. We have actually done 1,825, right? But if you compare this to the past first quarter of the past few years, you realize that we actually are in a way a very different amount compared to 2021 and 2019. In fact, we are just at 2020. We are now at 2019 numbers, right? To me, I think it does show a little bit of a slowdown, that the volume has indeed dropped, right? And if you look in the resale side, we did 3,377. And if you compare to the past few quarters, you realize that we are still relatively quite healthy in the resale market. And again, to me, this would actually mean that because there is a vast difference in terms of prices between the brand new properties and the resale properties, and therefore many people are moving towards a home which is more affordable, right? And perhaps they are also looking for a larger space compared to the new ones that has more of a more compact type of layout. All right, let's talk a little bit about en bloc. En bloc this year, I think I've mentioned somewhere last year that en bloc market is going to be a bit quiet, and yes, it's a little bit quiet after all the new measures was introduced in December. En bloc market, what we have achieved this year, all right, I'm going into properties that has residential components. Those that without residential components, that are full commercial, it is not stated here. Yeah. So this is done, Gloria Mansions is at Pasir Panjang. This is in District 5. Land size is quite a good area, right? It's a freehold property, 1.4 plot ratio, right? This will tell you how many units you can build within the development itself. And the nearest MRT is Haw Par Villa. Yeah. At a reserve price of 69, they managed to secure above the reserve price, and it could potentially yield 59 units. The other one is at Kembangan. Yeah. This property was done in March, right? Freehold development also. The nearest MRT is Kembangan MRT station. It was sold at the reserve price. Potentially, it can also yield 27 units. Now, when I say potential yield of 27 units, it does not mean that the developer will give or will build 27 units, right? They could have larger units or smaller units, right? But in total, it's an estimate. So this would be the units where it's part of the 6,700. Once they have achieved their planning approval, it will fall into the existing inventories. Right, next one will be in District 15. I think this is very nice. Hague Road area, right? You realize all these are all very small plots of land, yeah? 27,000 freehold property also. Plot ratio 1.4. This was sold again above the reserve price, yeah? This is a bit different. This was actually sold to an individual, yeah, at District 8. The Fragrance Group CEO actually bought this Verdun house, yeah. He bought it also above the reserve price. And then, of course, this is the one of the ones that all of us have been looking at, Golden Mile Complex. It has confirmed a sale in May. I think all of you are quite aware there was some controversies, not really controversies. I think there's some difficulty or something special about this development because number one, it's been gazetted as a conservation building. Yeah, at the same time, you can see that its reserve price was at 800 million, but it was transacted at 700 million. Now, let me just talk a little bit about this project. Yeah? It's special because it has a gross floor area of about 56,000 square meters. There is a bonus floor area given also, and there's an alienation of the adjoining state land, right? And it will give them a total gross floor area of about 81,000 square meters. And the good thing about this land is that they're able to have the option to build a brand new tower, which is beside the main building of about 30 stories, right? Now back to this pricing, reserve price and the sale price here. I hope, at least for me to raise this up, is for all of you who are looking to at least purchase a property as an investment because of the possible en bloc. This is something you should be looking at because I have not done the numbers for this development, but if say you bought a property here in the past 1 to 2 years and this goes through, you realize that you're affected in terms of the SSD. You might put in some money in terms of its renovation, right? And at the same time, at a reserve price of 800 million, it could fetch you maybe quite a good profit. But right now at 700 million, you realize that as long as 80% of people votes for it, right, you have to go with the flow, isn't it? So you might either make a very small profit or there could be a chance that you could lose money if, let's say, you bought a property to speculate based on en bloc, right? Like I said, I haven't done these numbers yet. They may have made some profits over here, but I'm not so sure. Yep. So now next, where is the market going? And I think all of us are quite excited to know. This is what I raised up in my previous update. I concluded that and I still believe that renting where you stay and buying where you invest is the new plan. Is something that if you guys are not so sure about the numbers, right, do reach out to me. I can go through with you once again, right? This is, I think, is a very important plan. And next is for all of you to prioritize your seed capital. Like I said, all of us have one chance to buy a residential property, and the thing that you do not want to face is having your seed capital, your CPF and cash locked up for the longer term. Obviously, my properties might go up back in price. If you look at reference, right, look at the data for Scott Square. for the past 12 years, prices has already crept up almost to its original value, but that was 12 years of opportunity cost. And the reason why that happened, to my opinion, is because it's a freehold property. What if you did buy a property which is 99 years? I think you might be very demoralized in that aspect, all right? On block action, we have gone through that. I think moving forward, many developers are going for something which is less risky, easier to sell, right? And I am still in the belief that for all of you to pick up growth properties, right? Safe haven properties, yeah? So one of my concerns I have is that when looking at the resale data, I'm just very concerned that a lot of people are moving towards affordability versus value, yeah? What I mean by this is that it's easy to purchase a property because you think it's affordable, but I think a lot of us should be evaluating about the desirability and the sellability of that project that you're buying in the future versus just looking at the short term, okay? Short-term hedge, of course, as an investment, this is fantastic for you to go into real estate hack too. It's something that I believe truly about, and if you wanted to understand what and how to perform the real estate hack, to look into the playlist in this channel. I've already have all the videos inside of how you can set it out on your own, right? If you do not want to do it on your own and you want to have a hassle-free involvement, you can always involve me and my company. We come in to step in to arrange all of it for you, all right? And I think this part is not relevant anymore for the possible wealth tax. We have gone through that in the earlier videos, right? And yeah, so that's about it for today, right? For these quarterly updates, I hope this gives you a little bit of understanding of what we could be anticipating moving forward. I think if I were to summarize this, I would say that we are now more or less at a possible turning point. I'm going to upload another video of the possible turning point, and the reason why I say that is because there's a lot of projects. In fact, one of my customers just bought a project in a development, and we renegotiated the listed price. And guess what? We were actually given a price at a discount, right? So for all of you looking out to buy properties in the RCR or the CCR, depending on the project, right, you realize that prices are presently negotiable. So it's a bit unfortunate for the first owners that bought it last year, right? Because today you are buying in a price, an entry price rather, which is actually better compared to them. Okay? Right, so that's all for today. Thank you all guys for supporting this channel for the past 2 years. Right, I hope this actually gives you a little bit more insights and for you to make a better decision. So, all right, till next time, take care and God bless.